In this session, let's talk about costing and how does costing impact the business profits and typically what are the various aspects of costing which uh, a financial manager or someone who is venturing into the world of financial management or financial analysis needs to understand. As in the earlier session, we were focusing on the cost volume profit analysis, which is more focused towards the break even analysis. When I have to typically do my budgets, which is what we would be covering in our next session, when I have to do some amount of budgeting, I need to put some kind of costs to my various activities. Probably for my production, I have to put some amount of cost to it, and administrative costs, employee costs, and marketing costs. How do I actually do the costing for each of my expenses? That is also one more aspect, because if at all you want to know what is the profitability of your product, or you want to know the profitability of your department or a business unit, it is very much essential that you understand the world of costing. Only when you know what is the cost associated with that particular product, then depending on the pricing that has been done to that product, you can say whether you have really generated a profit out of it or not. So understanding the various attributes of costing and computing the cost per unit based on various practices is something that we are going to deal in this particular session. With that as a background, let's move further. The first thing we need to understand in this context is, what do you mean by full costing? As it is highlighted here, what is the total cost that is incurred for me? That is what is my full costing. It could be the total cost of the various resources that I have used. It may be measured in monetary terms. I may be using some people to achieve a particular objective, or I could have used some systems kind of resources. I could have used some natural resources. So whatever are the various resources that I have used, which means I have sacrificed the monetary terms corresponding to those resources, I am calling that as the full cost that is attributable to my particular product or to my particular venture, to my particular business, whatever it is. So in case of a single product scenario, finding out the cost per unit is not a difficult thing, right? If I know the total cost that I have incurred in producing one particular product, I divide that by number of units, which will give me the cost per unit. And any pricing that I am doing which is much above the cost per unit is what is attributed to my profitability per unit. But how about if I am working on multiple product lines, or if my company is into multiple business operations where the resources are shared? In that case, how do I find out the profit per unit, which will be found out from the cost per unit? So how do I do the cost per unit in that kind of a scenario? In those things, what we typically observe is the number of units of output is not identical. First of all, here Some product may be producing more number of units, whereas the others may be producing quite lesser. And the whole costing is done based on the job, based on the process. The whole costing is typically done based on the process. And what do we mean by that? Just a small understanding is also required in this context. A direct cost versus an indirect cost. You just need to understand here, any cost that I can directly attribute to the number of units produced, that cost I call as direct cost. In any way, when I say I am producing one television, the direct cost is how many picture tubes are required. One picture tube for one television. How many electronic components are required? So many. How many speakers are required? So these are some of the kind of costs which can be directly attributable to producing one television. Similarly, labor also comes into it. How many units of labor, how many hours of labor are involved in producing one television, and what is the kind of a labor amount per hour that is paid to that labor. Or it could be very well like, in a particular month, how many labor or how many televisions can one single labor produce. If that is the case, I can very well find out what is the labor cost per day or per television. So wherever I have a model to directly attribute the cost of the product, cost of an entity to a direct production of the product, I call them as direct cost. That's where we are defining it as the cost that can be identified with the specific cost units, with the number of units that is produced. If I can identify the costs, I am calling them as direct costs. Otherwise, I call them as overhead costs. Now, for example, I have taken a building on rent. My premises, I am paying some amount of rent. It may be fixed, it may be variable, I am not bothered. Here, I should not get confused between a fixed cost and a variable cost. Even a variable cost may be a direct or an indirect, or even a fixed cost also may be direct or an indirect. Here, whenever we are talking about indirect costs, the cost cannot be directly attributed to a unit produced. As I said, rent. If I produce more units, the cost that is attributable to that number of units is much lesser, otherwise much higher. It's a common cost. How do I spread it across the units? I have to design a mechanism to assign the costs across the various units. But it is not directly related to the output that is produced. You have to see the difference between the two here. When I am saying labor or a material, I can directly attribute how much of material is required to produce 1 unit of output. How many hours of a labor effort is required to produce 1 unit of the output. But there is nothing like how much of rent I have to pay to produce 1 unit of output. So those kind of costs, I am calling them as indirect costs. So as a part of your initial analysis process, you have to break down the total cost which you are incurring to run the business or to manufacture or to produce a particular product. You break them into direct costs and indirect costs. Direct costs, finding out the cost per unit is not a big deal. You can simply do a simple arithmetic and find out the cost per unit in case of direct costs. But you may have to think through the various workarounds if you have to arrive at the same for indirect costs. But whenever we use the word called full costs, we add up the direct costs and the indirect costs either on a per unit basis or on an overall basis, but the total full cost of a particular product is a sum total of the direct costs as well as the indirect costs. So the first primary aspect, this costing will really play an important role for you in budgeting, which we will take up in our next session. We are going to take up a case study where we'll try to understand how do we do this kind of costing and take that costing into our budgeting exercise also. Is this fine? All right. Now let's move on from here. Once we have a basic breakdown between the direct and the indirect costs, now the next important thing for us is how do I assign these indirect costs? Because in the earlier slide we were talking about the direct costs can be directly attributable to the unit, but the indirect costs I cannot directly attribute it to the number of units. Whereas if I have to find out what is my per unit cost for that particular product, I need to have some kind of a base in which I assign the indirect cost, because there is no direct way to find out how much rent I should keep for product. So I will have to come out with mechanisms as to how I can allocate that kind of a cost. So that's where we talk about identifying the drivers. So different people can talk about different bases. Some people may say, okay, rent, how many units you have produced using the rent, and based on that you divide the rent by the total number of units produced in that venue. That you may call it as per unit rental cost. Or someone may say, okay, 20% of this rent is attributable to a different product, whereas 80% is attributable to this product. So do it as a division. 80% of the rent divide by the number of units of product 1, whereas the 20% of the rent you divide by the units of product 2. So now the drivers are completely different. Or some other person might say, try to do it based on the number of hours of usage of the particular premises. And somewhere you have to link it to the number of units. Only then the cost per unit will become more and more flexible. So you have to think through the various mechanisms, and based on that you arrive at a base. So basically, if you look at it as, if you are talking about any other indirect costs, if I look at it as a service that is being provided to cost units, so how much is the worth of the service and how do I divide that service cost across the number of units? Sometimes people, in the traditional way, any indirect costs can be assigned either based on the direct labor hours, how much of hours of labor effort is being involved for that indirect costs, or sometimes people look at it from a direct material. So either the basis is labor hours or the material usage. Most of the times you see all the allocations are done based on the labor hours. Sometimes there could be segmented, just like the earlier example I was talking of. 80% of the rent comes from this business segment, whereas the 20% I would like to put to another business segment, rather than a 50-50 allocation across the two products. Again, on what basis? There I can do it on the number of employees basis. Probably if I have 20 employees in for product 1, whereas only 4 for product 2 or 5 for product 2, then I may say 80-20 should be a better proportion. Or I can do it on the square foot of usage of that premises, right? or I can say the number of units produced. So you can think of various drivers, but as long as you are logical, you can do the allotment accordingly. So the overhead cost for you, as we are saying, it could be segmented, department wise kind of cost allocation, or you can do it based on the square footage, area, activity, and all that you need to identify is on what basis I should be able to segregate the cost and then allot them to the cost units. That is one major exercise as a part of the costing practice. And in some cases, one single individual item cost may not be possible. We might be looking at on a batch basis itself. For example, let's say I produce brakes in a batch process. Batch is like I don't produce one unit at a time, but I may be producing a lot of 100 units in one single go. The machine usage and various things, the inspection may or may not happen on one single unit of the product. It may happen on a lot size of 100. A random sample of 10 would be picked from those 100, and once they are checked for the quality, the whole lot is accepted, otherwise the whole lot is rejected, which means each and every single item need not be costed in that case. The cost happens at a batch level, at a group of items level, and once I identify the cost at a batch level, I divide it by the number of units in the batch to arrive at the cost per unit. Even this we will take up as one of the examples in the case study which we would be considering. We have a couple of scenarios where the costing is according to a batch process, and based on that allotment we'll do a per unit cost and we'll use it in our budgeting process. And if the full cost is charged, the whatever, and see, why do we do this entire costing mechanism? Whatever the full cost I've arrived at, if my price is more than that full cost, then I'll definitely make a profit. If my price is less than the full cost, then I will lose out on my business. That is one of the prime reasons people get into the full costing mechanism, so that the pricing of the product can be done comfortably based on that. But when we look at the traditional costing environment, for most of the indirect costs, we talk about direct labor intensive, and even the whole production we run it based on the direct labor basis itself. Number of hours put by the labor to produce one unit of the product. Even for distributing the rent, most of the times in the traditional costing and method, okay, how many labor hours has been spent on this product in this premises. Similarly, product 2, product 3, how many labor hours have been spent on these 3 products in the same premises. Now in that proportion, based on the number of labor hours spent, the costs are the rental costs are distributed, and after that, whatever the allocated rental cost, you divide it by the number of units to arrive at the cost per unit. That is the typical traditional environment. Whereas even in the earlier scenarios, we used to think about most of the time not an automated environment, more labor driven. Probably a businesses which were 20 years back, 25 years back, we used to talk about mostly people driven kind of businesses, labor intensive. So the moment I do a cost based on the labor, all other costs seems to be much of a lower volume for me. Whereas today we see everything the otherwise, right? Even earlier the overheads seem to be much lesser compared to the direct material and the direct labor costs, and the competitive environment may not be that heavy, so even if I do the costing here and there slightly plus or minus, things would not have impacted my profitabilities in a big way. Whereas today the whole business is becoming capital intensive. We see that lots and lots of loans are raised, lots and lots of heavy investments being made in the capital infrastructures. Everything is machine driven, moving lot from a man driven kind of a process to machine driven kind of a process. So what is typically happening is overheads are contributing to a significant part of the business. It's not the labor costs which are the significant anymore, except for a couple of industries. Still a couple of industries are more labor driven, but majority of the industries today are capital intensive, which means a lot of overheads coming up, a lot of competitive environment coming up, which makes the importance of costing more and more heavy in the current scenario. And there was a relatively newer world in the costing environment called as activity based costing. What it says is you try to do the allocation of the cost based on the activities. Depending on the various activities that have been performed, try to do the allocation of the cost. So instead of thinking of rendering a service to the cost units, it's the business model or the thinking process has to be slightly changed here. Instead of thinking as rendering a service to the cost units, it is like the overheads are actually caused by the cost units. If you think like this, the overheads are actually caused by the cost centers. So in what proportion these overheads need to be charged is what should be the approach of activity based costing. So what is typically coming out is there is a huge amount of time that is spent in trying to identify the cost, exact cost drivers that can be more relevant to the pricing of the to the costing of the product. But there is a huge amount of exercise. Not everything is assigned on a per labor hour kind of a basis, or not everything is linked to the labor hours. Depending on more appropriate drivers, the costing is typically done. So it actually helps in better management and control of the overheads across each of the business verticals. But the major criticism that is associated with this activity based costing is it's a huge time consumption activity, and it is pretty much expensive to apply because again there is a lot of subjectivity involved in this process. So whatever the extra benefit that is coming up, no doubt you will definitely get a better costing compared to the one that is determined by the traditional process. But on the other side, on the flop side, there is also a cost that is going up. So the extra benefit that is being derived by changing the costing mechanism may or may not be justified by the extra cost that is incurred. That's one of the prime criticism. But remember one thing, as a person, you might not be a finance intense person, you might be an operations person, or you might be a marketing person, but you still may have to do a budget for your business or for your function. You may have to, if your function is being shown as a separate cost center or separate profit center, then there is a very much essential thing that you may have to show your budgets, you may have to do the costing, and you may have to give a proper projection of your profits for the next year or so. So from that standpoint, identifying the appropriate costs and using the appropriate logic, because here, unlike the financial accounting space where you are governed by standards like IFRS or GAAP or some kind of accounting standards, when it comes to costing or budgeting, no standards. They are more of an internal kind of space. So you can there is no such rule that probably the rent has to be allocated only in this manner. It's more of a logic, it's more of a business, it's more of understanding the appropriate drivers for that particular overhead cost, and then using your intelligence to do the allocation. So what the activity based costing is actually helping out in that scenario is helping you to identify the exact drivers which can make you do a better prediction of the costs involved. Is this fine? All right. So just to a quick summarization, the pricing. Why do I need to understand the costing? To a large extent, the businesses even today, they do their pricing on a cost plus basis. The moment I understand that the cost of my product is $100, they'll say let's decide the price at 25% more than the cost. So the price of the product in the market will become $125. If you had done a wrong costing mechanism here, probably you have done an undercosting, then you have to compromise very heavily on your profitability, and the whole market value and the whole expectations of the business typically go down. The whole motivations across the various layers in the business go down. So it has a very serious impact. So if you have done the costing slightly mismatched, there is a problem that your price gets badly affected, which could result in you losing out a bigger chunk of your business. And this costing also helps you to identify what could be the profit that the company can generate in the next year, probably on a month-on-month basis. It also helps you to understand, is there any possibility of intermediate capital raising process? Am I going cash deficit at any point in time? All these things can very well be looked at. Whereas the couple of major things that we look at as a disadvantage with this costing approach is it's purely backward looking. It does not give me much of an impression about what would be the future costs. It does not give me much impression about how much I should allocate for the next year. But a big pointer is, if I look at the history being a good reflection for the future, the historical costs, whatever I have incurred, especially on my employees, especially on my marketing, I can very well look at those appropriate drivers, and based on them I can project for the future. For example, the marketing costs. If I have been observing, I will say the marketing cost should be some proportion of my sales. So if my sales target is 100 crores, then probably I may say I can put 3 crores, 3%, which is 3 crores as my marketing expense. Now, the actual costing I could have done based on whatever the total marketing cost that has been incurred, and divided by the products, or I could have divided it by the number of sales personnel whom I have. I could divide it on many bases. So if I have done the basing correctly, and if I use a similar kind of a basing for the next period, probably it becomes a forward looking. But in isolation, the costing mechanism is more and more of a backward looking approach. So it gives me more information which is irrelevant than that is relevant to make a decision making, and that is where it has very severe limitation. But overall, if I have to be successful in my budgeting process, then I should really take care of understanding the costing process more and more effectively. So that's what I want to give an input as a part of this session. Just introduce you to the world of costing, help you identify the key differences between the direct costs and the indirect costs, also give you an intimation on how do you allocate the direct costs and the indirect costs to the units, and just giving you an overview of activity based costing. So this can help you in digging a little bit more further into the various aspects of costing. But the prime intention for a manager of a non-financial unit like manager operations or manager HR, every department manager today is being asked to prepare an annual operating plan or an annual budget. So this understanding of costing will definitely help you in preparing the budget very effectively. This is one thing which we'll look at as a part of our case study on budgeting, which we'll take up once we understand the world of budgeting in the next exercise. That shows you the application of these various costing methods also. Alright. So thanks a lot for listening to this session. If you have any further queries on this, you can very well give me a call on the number that I have provided below. You can even send me an email at vamsidhar@pacegurus.com mentioning your doubt, and I would be very much pleased to clarify your doubt. So with this base, I would start looking at budgeting, give you an overview of the budgeting, and then we'll take up a case study which will involve both the costing and the budgeting mechanisms in that. Thank you very much.